Welcome to IN60. I'm Peter White, and my guest today is Sean Fenton, Managing Director of Sage Capital, the long-short equities specialist. Sean, welcome.
Thank you.
I'm going to ask you a series of short, sharp questions looking for concise answers. You can pass on anyone, and your time starts now. Volatility, opportunity or threat?
We generally see it as an opportunity when things are really moving around, particularly a lot of things going in different directions. That's great for our investment process, but it's got a level. If you get too much volatility, markets can become disorderly, driven by liquidity and panic and shift away from fundamentals. And that's where things get tough and you probably need to control risk a bit more.
If you could hold one position in the next 10 years, what would that be?
It's really tough. No one's got any idea what the next 10 years is going to look like, particularly out there. So anything that's big and diversified would probably be the way I'd go. But an index fund's boring. Maybe computer share. I'm pretty confident the next 2 or 3 years they're leveraged to increasing rates, cash rates around the world, and they've got a pretty stable business. So that's a good starting point for the next 10.
The best investment decision you've made in your career?
Personally, I always remember buying put options in tech stocks back in February 2000. I'd nearly lost all my money in 2 weeks and then made multiples a couple of weeks after that.
Which sectors face the greatest challenges in the next coming 3 years?
I think very short term, you're going to continue to see growth stocks under pressure as the Fed normalises policy and lifts rates. So long duration's going to be under pressure. Moving on from there, then it comes down to a question of, do we have a gradual tightening and higher rates, or do they get aggressive to control inflation and we tip into recession? And then your cyclicals, resources, whilst inflation hedges in the short term, could be under pressure going further forward. And then after 3 years, potentially banks, financials, if we end up in a recessionary environment with credit risk, could struggle from there.
Should investors be worried about inflation?
Definitely. Inflation really kills the value of all investments. We've had 20 or 30 years of falling low inflation, which has allowed central banks to really keep policy easy, and importantly, every time things got rough, come in and really aggressively cut rates, inject liquidity, expand their balance sheets. That Fed put's not going to be there in a higher inflationary environment. So we're going to see potentially higher interest rates, lower multiples, and the risk of slower growth recessions. So that's not great for risk assets and equities.
Is stagflation a bigger threat and a bigger worry or not?
It's definitely a threat. It's something that really, came to prominence in the 70s, where they had very high inflation and they started off fighting it, had some small recessions, but didn't really quite succeed. So it took them a decade before Volcker came along and really tightened, caused a recession and killed inflation. So that scenario of not fighting it hard and early, things could drag on, and high inflation is not good for growth. It distorts investment decisions across the economy.
What's the biggest benefit of your long-short strategy in a few words?
The key one is diversification. Being long and short means you can open up your investment spectrum. You can hold a much broader range of positions, and it enables you to really get more information in, more of your views around companies and who's doing well and poorly, while being diversified and controlling for some of those broad thematic risks like inflation and interest rates and growth recession across the portfolio.
Most powerful trend going forward for the rest of the year 2022 in Australian equities?
Probably the biggest trend impacting us, given our commodity exposure, is commodity prices. They've been very strong, with strong global growth, recovery from COVID, easy policy, but really exacerbated by Russia's invasion of the Ukraine, potentially creating a lot of shortages. So the way that swings around is going to be a dominant driver for the Australian market for the rest of this year.
The most important fundamental ratio, is it cash flow, debt, profit or earnings?
At the end of the day, they all tell a part of the story, but if the first thing I look at is generally earnings per share as the starting point for any company.
And on the other side of the coin, the biggest red flag for any investment?
I think when you see a change in management or sell down from insiders, particularly long-standing management founders departing the company, that's unless it's very well transitioned and red flagged, the insiders always know more about a company than you do. So insiders selling, management departures are a big red flag for us.
Risk or return, where do you put most effort?
We put more effort into return in finding the ideas and understanding what drives things, but risk's very important. So that's making sure everything's balanced across the portfolio at the end of the day. So it requires attention. I think not enough investors pay enough attention to risk, but definitely returns what it's all about. So that's your starting point.
Fascinating to talk to you, Sean. I think we're going to rename it IN90 or IN120, but thanks for your time today.
Thank you.